This is the Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. Today is 1/13/2021. Well, we saw a major hit to the precious metals markets last week, right out of the gate, $125 decline. What do you make of that? Is the party over? Does it matter that we're going to get trillions in bailouts for every unworthy governmental entity on the face of Earth, not just in the United States, but all over the world? They're going to be rewarded for their inefficient and corrupt and just downright awful governance with more money. And what's that going to do to the currency? And what will that do to precious metals? We've already seen what it's done to cryptocurrencies. And our good friend from Junior Miner Junkie, David Erfle, is with us now. Hey, if you've got an opinion on this, we want to hear it. Do you think the currency is going bust, or can they keep this ballet going when they've lost the star? That's the question. Well, David, tell us what is happening now in the metals markets. What's your take on the decline and where we're heading to next?
Yeah, Kerry, thanks again for having me on. It's really interesting how we rolled out the new year last week in the precious metals market. You know, coming into the new year, we had everything going for us in the sector. We had the silver juniors, the silver juniors SILJ ETF had made a 52-week high on the last day of the year last year, and we had the juniors leading the miners, and we had silver leading. And on Monday, we got a huge $50 pop, and it looked like we were off to the races. And all of a sudden, what gold loves to do to you, right when you get all bulled up and frothy, it loves to pull out the rug from under you. And that's exactly what happened. We had a $125 round trip after a false breakout of its downtrend line, and caught a lot of people off guard. Fortunately, you know, I warned my subscribers the last few weeks of 2020 that I was going to be taking a lot of profits the first week of the year. It was nice to hear that a few of my subscribers did the same. And it ended the week below 1850. We had a weekly close in gold below 1850, which is not good for the bull side. And then on this Monday, we opened up with strong relative weakness in the miners, while gold appears to be making a bear flag at that 1850 level. So now we have relative weakness in the miners. We have in relation to the gold price. We have that gold bear flag being created at 1850, which portends more weakness coming into the sector. I mean, it sold down and bounced a little last week from its uptrend line around 1825, and it sure looks like now that the miners are trying to tell us that there's going to be more weakness in the gold price. That's what the technicals say, while the macro fundamentals have never been more bullish.
Hey, and it's interesting also, David, that this week is options X.
Mm-hmm.
So they've kind of pulled out all the stops to paint the tape effectively. You think this is just a mass tape painting exercise to kind of restore or reinforce confidence in the face of a new administration with new bailouts and we were going to get the bailouts no matter what. You and I discussed this before. Nothing was going to change that. But is this kind of maybe the mass delusion here that's taken place?
Well, and as you said, we knew it, and most everybody else knew it. So I think this last week was also kind of a sell the news event when the Democrats pretty much won won the Senate, and now they control all three branches of government. So that had a lot to do with it. Absolutely, there is manipulation in the sector. All these banks have been busted for it numerous times, but they can't manipulate a trend. They can manipulate the price within that trend, and absolutely, there's a lot of that going on. But also, you had real yields rising, which didn't help the gold price. And you also have had a very overcrowded dollar bull market, dollar bear market. So, we had a bullish engulfing candle in the U.S. dollar coming into this week, and the dollar is bouncing here a little bit. So that was a very overcrowded trade. So you get a stronger dollar, you get real yields that are rising, you get option expiration, like you mentioned. It's funny, we had on the very last trading day of November was when we hit the low in gold at 1767. So I wouldn't be surprised if it gets down to at least that area to possibly double bottom there. And there's even a slight possibility that gold can even test that 1690 to 1700 level, because what we got going on here is like you said, a lot of stimulus, a lot of money printing. These global central banks are going to continue to reflate their balance sheets and extend their balance sheets. And the Federal Reserve's balance sheet is well over 7 trillion now. So we know the long-term macro fundamentals are still good for the gold price, but in the short term, we're still probably going to see some weakness.
Yeah. So, and it is in all likelihood, it's going to be a short term decline. My friend Nick Santiago calls it backing and filling, right? And he was calling for at least one more substantial decline before we really take off. So you were smart. You took money off the table. Just give us a few rules, formal or informal, that you use to decide when to take money off the table, David.
Oh, sure thing. Yeah, it's funny. The March panic in 2020 taught us all a few more lessons. Like we didn't need we didn't need some more bearish lessons in this sector. I've been in this sector almost 20 years, and it's funny. Just when you think you've seen it all, you see something that surprises you. So risk management is key to the success of a junior portfolio for sure. And a big one of mine now is to take, if I'm fortunate enough to have a lot of profit coming into the new year, take a bunch of it off the table on the first few weeks of the year. That way, you don't get taxed until later on it, for one. And another, you start off the year with a big win. It makes you feel good, and it also looks good in your portfolio. Another risk management rule of mine is if any position gets over 10%, I will trim the position, because some of these things have gone up 3, 4, 500%, and it doesn't make sense to sell your core positions, but it does make sense to trim profits along the way. And that's always what I'm thinking. I kind of use that. One of my favorite movies is Glengarry Glen Ross.
Oh,
And
sure.
Alec Baldwin says, "Always be closing," right? Well,
ABC.
in this sector, in the junior sector, you always got to be thinking, always be thinking about selling. When are you going to sell? What's that point where you're going to take some off the table? But since we are in a bull market now, Kerry, it's a confirmed bull market. You do not want to sell your core positions. Always hold your core positions, because this sector is going a lot higher by the time this bull market is finished.
Okay, so you're big on Canadian private placements. I've participated in a number of them. Not real hard to do. It's not like it's an exclusive club and you need a secret decoder ring and a special password. But uh, on that note, it does present complications to even sophisticated investors, because you're locked in there for a period of time, 4 to 6 months. And then you've got the legend removal process, which is, I don't even want to go into that, but SEC, an arcane rule, I think it's section 144 of the SEC Act. And it just is a real nightmare for US investors. So it really does impinge upon your flexibility as an investor. How do you personally deal with that added risk?
Yeah, that I'm glad you brought this up for people because if you're fortunate enough to be an accredited investor and you're able to to participate in these private placements and you are a U.S. citizen, these rules keep getting more and more draconian for U.S. investors. They added another one last year on the legend removal process. A lot of these companies, and the funny thing is the management doesn't even know these rules exist. There's something called a have sell legend removal process or a will sell legend removal process. If it's a have sold legend removal process, which a lot of these companies are putting into their documentation now, as a U.S. investor, let's say that you got into the placement and the stock has doubled or tripled by the time the holding period comes off, right? The rational thing to do is to sell half of it and keep the rest of it.
Right.
Well, as a U.S. investor, if it's a have sold legend removal, you have to sell the whole thing to get the legend removed.
This
So
is like
that is
1984. This is
yeah, exactly. So this is really limited the number of private placements that I'll participate in now. I've 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 cut down my private placement participation considerably because of this.
yeah, and then you've also got these, it's crazy stuff that makes no sense. Like, you've got the legend removal going on, and it's just like a black box. You have no idea how long it's going to take, when it'll be done. A lot of issues to confront there. On the other hand, if it's such a good deal, and you get these warrants, half warrants, full warrants, you can really clean up on these companies. So you have to
Right.
balance it. What percentage of
Exactly.
a junior portfolio would you say should go into Canadian private placements if you think it's worthwhile?
Well, like I said, it depends on where you're from. If you're a U.S. investor, I'd say that percentage should be considerably lower. But if you're Canadian, it should be considerably higher.
Yeah,
Um,
got a big
I mean, we're
benefit.
sitting here waiting to sell our shares to keep our warrants. After 4 months, we have to wait another 4 to 6 weeks till the legend gets removed, while Canadians can sell them 4 months and a day after. Um, and I'm I'm I don't like to sell my shares, right when I can. But if
Right.
the investment doesn't look like it's going to pan out, I'd like to have the option to.
Yeah.
So
Um,
that seriously inhibits my total of how many private placements I'm going to do. So, you know, um, I did. I think I did 3 or 4 last year. I think that's about how many I did. But I'll probably do even less this year.
yeah. Yeah, they've been good to me, but sometimes I think I've been much more lucky than smart in dealing with them. And, in life, the saying is, I'd much rather be lucky than smart. So
Right. Well,
that's
put
part
it
of
this way, Kerry. You put yourself in the position to be lucky. That's what you've done. So that's because that's what these things are. They're lottery tickets. That's what the warrants are. So the prudent thing to do is once the shares become free trading, is to at least sell half of them, and keep the rest. But and the warrants are just a little lottery ticket that comes along with it, which is just an option to buy. You don't have to buy.
it. And we're going to go back to something you said earlier, but you just alluded to. So when
Mhm.
you got a stock and it's gone up three, four, or five times, right? You should always take money off the table because these things are so volatile. It could go back down to less than what you paid for it. If you have a three bagger or four bagger, how much do you hold on to?
Well, it all depends on the company. It all depends on the sector, where the sector is at the time. If it's a an early stage company, those are a lot riskier. There's a there's they're much higher risk. So a double is usually a good time to take some money off the table on those. But if it's a developer explorer, and they're de-risking a high margin project, I'll let that run a while. And I'll wait till a good time to at least get my investment money off the table. Is it after 3 times or 4 times? It all depends on the company and where we're at in the sector.
Yeah, and we've had some stellar returns here, let's face it, like you said, which
Right.
and your
Yeah,
discipline there of selling. I'm a big believer in always taking money profits off the table. Yeah,
absolutely. Absolutely. And plus it's a good time to take a step back and take a look at the long-term chart of the gold price. Bring up a 20-year chart, monthly chart of the gold price. Take a look at it. I mean, this is just a small little blip. And this correction needs to take place. We need to basically get out all those weak hands, and basically when it turns around and when it finally does bottom and go higher, you want that up leg to last a while. If to just anything that starts to go up parabolically, the higher it goes. I mean, look at just Bitcoin's a perfect example. It ran up to 44,000 and it corrected 25% in a couple days. So, that's what I loved about the last the first bull market that I participated in, which I got in for the first time in the early 2000s, and just went up, just like this. It didn't go up parabolically. It just went slowly up, and that's what you want to see when you're because you're trying to make the money in the stocks, and the stocks are volatile as it is. And if the gold price gets volatile, these miners are going to get even more volatile, and it's more difficult to hang on the more volatile they get. So a slow, steady rise is fine with me. And then when these consolidations happen, the longer they happen, the more healthy it is.
absolutely. And couldn't agree with you more. It just became too easy for every miner out there to raise money
Right,
privately
right,
or
exactly,
publicly.
exactly. That's a great point, and a big reason for all this weakness is all these miners, all these juniors raised a lot of money, and
Yeah,
the shares became free trading at different times over the past, since April. And which we had a top in August, you had tax law selling, and you
sure.
had all these shares becoming free trading. But like I said, take a step back and look at the big picture. The GDXJ went up 180% in less than 5 months.
Yeah,
That's a
that's a
huge
move.
move that needs to consolidate. So,
Absolutely.
all this consolidation is good. It's healthy. We don't want to see a Bitcoin like parabolic rise right away, because then our bull market will be over sooner.
Yeah. Yeah. The longer it takes to unwind and consolidate, the healthier the market and the longer the
Absolutely.
bull will go on. And yeah, like the companies we follow, David, they all have like 2 years worth of cash for their drilling programs. They
Exactly.
don't need to go
Yeah.
back. And
Right.
so that is going to work itself out. And M&A activity, I just want to cover that one last thing.
Hmm.
So the
Hmm.
M&A activity is really going to pick up here because every mine on the planet, in theory, is economically feasible now. We know that still 80% will never be built, but in theory, based on the gold price, based on PEAs and resources, virtually everything on the planet is feasible.
Right. And if you concentrate on the juniors that did their base case at 1250, 1350 gold, those are the ones you want to take a look at. The higher they did their base case on, the more of an optionality play it becomes if the gold price continues to correct here. So, like you made a good point at the beginning of what you just said, was these companies that have a lot of money are the ones to take a look at, and the ones that need to cash up soon or at some point this year are being sold right now, no matter
Yeah.
how good their projects are, because the market's seeing ahead. That they're saying, okay, why should I invest in this high risk early stage exploration company if they're going to need to raise money? I'll just wait till the stock gets till they announce a private placement with a warrant and invest in it that way.
Yeah, exactly. Well, the one good thing is that the guaranteed short on the sector, where if you just shorted any mining stock anytime for the past 3 years, that's over. All right. They're not making guaranteed profits anymore, and we saw
No,
this.
no,
Eh,
no. That's a good point, and because we are seeing quality bifurcate. Quality is definitely bifurcating here, and the ones that are in the stocks, the juniors that are selling off strong now are the ones, like I just said, that need cash. They're higher risk. They don't, they're not in the process of de-risking a high margin project. They're still early stage, or they're optionality plays. So we're
Either way.
seeing a lot of bifurcation in the quality stocks. I mean, one that I've held for quite some time now, Marathon Gold, continues to make all-time highs here while the sector is correcting. So you get into these juniors that are de-risking high margin projects in a top tier jurisdiction. You really can't go wrong if you get into these stocks on if there's weakness being created right now in this sector sell-off in stocks like that.
Yeah, the next round of opportunity is really just ahead of you. Just be a little patient. Go over to juniorminerjunkie.com. That's MINER, and sign up for David's service, man. I've been a subscriber for quite a while and an admirer. Love what you do. And hey, any questions or comments for David or myself, where you think this gold precious metals bull market is heading? Lower than higher, higher than lower? Give us your opinion. We'd love to hear from you. The email address is kl@kerrylutz.com. And while you're at it, sign up for our newsletter if you haven't already. It's free, financialsurvivalnetwork.com. Just go to the site and fill in your email address, and it'll come to you automatically. David, always a pleasure. Good luck for the coming year. And we're both COVID survivors, so that says something, doesn't it?
Yeah, absolutely. Thanks a lot for having me on again, Kerry, and best of luck to you and your listeners and viewers in 2021 here.
This is the Financial Survival Network. Now more than ever. The Financial Survival Network.